Hey everybody, welcome to the morning market briefing. It's Thursday, August 27th, 2026. I'm not sure how we got there, but we were just doing a quick geography and population scan on Memphis, Tennessee. So
I was talking about
anything we need to share?
Well, it started with we were talking about there's a guy who won the NCAA wrestling national title last year. He had 133 pounds, little teeny guy. But the big storyline when he was doing that was that his girlfriend was like 6'3", and their honeymoon photos are outrageous. It doesn't even look real. You think this must be AI because he is so small and she is an above average size lady. And then I was saying that I have a fraternity brother who lives in Dyersburg, Tennessee.
Oh, yeah. My great aunt lived there.
Yeah, it's a very, very small town, and it's noted as being close to Memphis, but it's 80 miles away because there's nothing. Like, Memphis is geographically isolated, and then we got into, like, how geographically isolated it is.
Yeah, I mean, it's basically got the river.
Yeah, it's like if you go, it doesn't matter which direction you go, you're going a long way to the next big city.
Yeah.
It's like north, it's like you got to go St. Louis. South, you got to go all the way to New Orleans.
It's a brutal drive, too, like, from here.
Yeah. It's like 8
both
hours.
My grandparents lived there, and it's like 8 hours, 6 of which is like nothing.
It's got to be the most isolated city east of the Mississippi of over 1 million people. Because it's just, I mean, there's just nothing around it.
But then you get there and you get that beautiful pyramid of Bass Pro.
Yeah, and the ducks.
Yeah.
Lest we forget.
Yeah. You got to go see the ducks at the Peabody.
Yeah, Peabody Hotel.
Yeah. All right, Nvidia up 6%, Ben. Revenue forecast up 70%. Some people may be disappointed because we thought it might be 100%, but some supply constraints there. Nevertheless, the street was looking for like a 40-45% move.
I mean, it's unbelievable that they can even forecast out a year and a half on their business here because they have such good visibility because all these data centers are getting built and then they're all going to need chips. And so Nvidia has a lot of visibility toward that. I mean, if it wasn't already so widely owned, and if they didn't have a little bit of margin pressure in the next quarter or two because of memory prices, I mean, this stock
be loading up
would be. I mean, I think. I mean, I ran the valuation. The valuation in our model went from 290 to 417.
Woo!
I mean, that's what happened.
This is like 4 years of that.
It is unbelievable. Like our estimate of net operating profit after taxes went from like something like and I'm probably screwing up the numbers here, but like 55 billion to like, no, excuse me, it was much more than that. It went from like 250 billion to like 350 billion. I mean, it was unbelievable because the revenue is so much better than expected. And the margins are still going to come in just fine. I'm not worked up about it at all. I think that people are going to figure out this memory issue and get that solved. But I mean, I think you ask who's going to be spending all this. Well, the hyperscalers have increased their estimate from 1 trillion to 1.3 trillion this year. And then as we look into next year, it's going to be about 50-50 split between hyperscalers and then all these other things like the neo clouds and all, and the sovereign clouds and enterprise. And a lot of that's going to be driven by the financing schemes that we've been talking about here. And I think when you've just, if we had been in the 5th or 6th inning of the AI build out, which is what I had been thinking, 3 months ago, I think we've just, with the financing innovation there, I think we've reverted back to the 2nd or 3rd inning, frankly. And so we're looking at a number of ways to leverage this in portfolios. We're not going to jump in on the hot stocks like Micron, which I do think is over earning. They have higher gross margins than Nvidia and provide far less technological benefit. But I mean, we're going to be looking at things where we are sending out a pitch today on GE Vernova, which is a spinoff of General Electric. They provide the turbines that translate gas into electricity, convert gas into electricity, and they're only one of a couple companies that can do that. And here in the United States, we have abundant natural gas, and we have abundant need for power. So it's kind of a natural fit there. ASML building out the memory chip. So we're definitely looking to lean into this. but do it in a disciplined and measured way where we have good understanding of the long-term dynamics there and not just kind of following any hot stock.
Yeah, and I think the nice thing, I don't know if you would agree with this, Ben and Tom, but the nice thing about Nvidia, it's kind of nice to have a bellwether that is so well known to reevaluate where we might be in the stage. We're not necessarily jumping on huge assumptions. We're looking at, the most powerful company in the world saying, no, revenue is going to be up 70%. And we can relatively easily extrapolate out, okay, who else benefits from this?
And they say that and he's like, this is based on the supply constraints that exist today. Yeah. And I think the implication is
those won't exist.
Those won't exist. Like
certainly not 18 months from now.
There'll be more supply.
Yeah.
Yeah. They may still be supply constrained, but at a higher level than that.
And we were talking about it yesterday afternoon that last year they thought that growth was going to be 40% or something, and then they doubled that 25%. Yeah, so it's like last year they're like, we could grow 25%. Yeah, and you talk about the second derivative. It's like, oh well, the rate of change is slowing significantly because they were up hundreds of percents before. It's like, well, actually, that is not slowing. It's just continuing to be parabolic.
It's doubling again. I mean, it's unbelievable. And
I may get earn $2 trillion in revenue. Maybe next year.
Yeah.
That's crazy. When 5 years ago, the number of $2 trillion companies, period, just in terms of total value, was, you can count them on one hand.
I mean, if I'm betting on a company to be the first $10 trillion company, it's Nvidia, without a doubt.
Who would be number two?
Narwhal.
I think that one's fair play to a lot of companies that we've talked about, and then companies we haven't talked about. I mean, I think obviously Amazon, Google, Microsoft, Apple are all in that mixed. But Tesla, SpaceX, Anthropic, OpenAI, I mean, you got to start including a lot of these other hyper-growth companies that could be leveraging this.
It's wild. Seeing some software benefiting from AI. Okta, a name that I guess for a little while showed up in some portfolios, but not so much now, up 18%.
Yeah, I wish it was yesterday.
Yeah.
Yeah, so I mean, I think the theme right now is internet traffic. I think so. One of the things that Jensen Huang talked about was that the CEO of Nvidia, he said, we've historically had more people on the internet, more people-driven, human-driven internet traffic than AI agent traffic. He said, that is changing. We're now transitioning we're about 1-for-1 right now. And he said that in the future, we might be 10 to 1, 100 to 1, thousands to 1. And so the more internet traffic, the more people, the more security you need. So you need more authentication like Okta. You need more cybersecurity like CrowdStrike. CrowdStrike's up 8% this morning. And then even just people accessing information. Salesforce is trying to lean into that today. They're up 10%. So more internet traffic is driving, especially a lot of volume-driven growth at some of these software companies.
So they're saying all our homeboys in the Amazon who just got Starlink are going to need to adopt two-factor authentication to protect their data.
It's going to be fun.
Have you noticed just when you're on Google that you're getting a lot more requirements to authenticate that you are a human?
Yes.
I mean, it's kind of annoying to me, but it is. I mean, every time you do that, that's revenue in Okta's pocket.
And the rise of platforms, and I'll use one as an example, and I'm sure some listener out there that's smarter than me will come back with, well, here's why that's so important. But like some platforms where I'm like, this is just not really that significant. Why would I need this? Like our HR system that we use, like where you go in to log a day off, two-factor authentication, got to have it. And it's like, somebody going to come in and be like, hey, actually, Andrew's not here today.
Yeah, there's very little functionality in there. It's like, oh, you've got to sign your
quarterly statements.
Your quarterly statements saying you didn't make trades you didn't disclose.
But it's just becoming so ubiquitous that it's everywhere. And it's, I'll be honest, drive me crazy.
I think I'm going to try to build an agent that does two-factor authentication for me so that I don't have to worry about it.
take that, compliance.
Yeah, Hicks, how do you feel about
Hicks
that?
looking real uncomfortable over there.
You know, send me an email.
I
to
mean, Hicks has had a
confirm.
hard time proving that he's a human.
Yeah. Won't even say anything.
So compliant.
Yeah. Hewlett Packard down 11%, facing the same chip challenge that others are facing, but maybe with a less sexy story to sell.
Yeah, basically, if all memory prices are expensive, then people are going to buy fewer PCs, and that's what they're seeing. So they're down 11%. They say in Q4, so they gave guidance for Q3, but then also Q4, they said our outlook reflects the industry's view that PC units will decline high teens in the second half as pricing actions pressure demand. And so, I mean, this is how markets are supposed to work. You know, prices go up and demand goes down. Quantity demand.
High teens are a problem. Got to get the drugs off the street.
It's true.
Dollar Tree down 4%. Dollar General, though, staying strong.
Yeah, I mean, it's pretty interesting. So Dollar General and Dollar Tree, I think both of them get lumped in as the same businesses, but Dollar Tree is the kind of the discount store that you see in metro areas, and then Dollar General is the place you go when there isn't a Kroger or Walmart or anything close by. So Dollar General would probably work out really well in Dyersburg.
There you go.
Dyersburg or Moses Lake. Dollar Tree would probably do well in Moses Lake too. I can't speak for Dyersburg, but Dollar General's there when no one else is, and so they're actually doing fairly well. But they've been hit pretty hard year to date versus Dollar Tree. Dollar Tree's done pretty well year to date, and so they're coming off the boil just a little bit. So I kind of look at this as just coming back. There isn't really a major read for the consumer here. I think generally the consumer remains steady but unspectacular. The consumer isn't driving acceleration in the economy. I think we all know what's driving acceleration in the economy. It's not the consumer. The consumer is there. It's steady. It's stable. But and credit quality is in a good spot. But they're not driving growth in this economy. And then you see that from Best Buy results as well, which kind of mixed. But in general, healthy demand, not extraordinary demand.
Meta has reached a settlement. I read through this, Ben. It essentially seems like Meta is offering some cash over basically a 10-year period. And then they've said, hey, we will become your parent of your children. We will set screen time limits. We will have mandatory breaks if they've been on our apps for too long. We won't let them use it between midnight and 6 a.m. Is that the correct interpretation here?
Yeah, I think that's exactly right. And what's interesting is too they also authorized $5 billion contingent on other social media companies or other internet companies in general adopting this. So yeah. Google, TikTok.
Yeah, if we're gonna be hamstrung, we'll give you more if they also are.
Which I think is actually brilliant, because $5 billion from Meta is a drop in the bucket. $5 billion for Snapchat is killing
money. Yeah.
So I mean, honestly, I look at this and I think I don't have an issue with it. I think there will be people who say this is kind of Big Brother. You could also look at this as, hey, what did Tucker say?
Daddy's home.
Daddy's home.
Yeah.
And it's like, and you're getting off social media, which, I think that there are, my personal view is that there's negative societal externalities from it. So less is probably more, especially for impressionable children.
I think my question is, how do I get my greasy mitts on some of that cash now that Zuckerberg has adopted me?
I mean, it really is. I just want to point out, because I think the big social media platforms get an awful lot of criticism. To your point, Ben, I think a lot of it is merited. It's very well founded. It's due. I want everyone to understand that the settlement, a non-inconsequential part of it, is, hey, we will make sure to babysit your kids and keep them off these apps at 1 a.m. And many of the parents who decry social media need them to do that. So wake up, moms and dads.
Yeah, that's a great point. It's
Like, it's crazy.
Ultimately,
point-
whose responsibility is
Right.
it to
Yeah.
throttle your kids' phone use?
Yeah.
It's Mark Zuckerberg. I think I think what we learned today is it's not you.
But you also bring up a great point, Andrew, is what's going to happen to the money. I think we can all agree we're not going to get checks in the mail as much as if you have a child under the age of 18, maybe you feel like you should get a check in the mail because apparently you are an aggrieved party. But no, it's probably just going to go to the state coffers.
Yep.
I mean, speaking of which, I did get an email this morning. I don't know if you guys did too, but Wellstar Kennestone Hospital, which is a stone's throw from the office, invited to join a class action lawsuit saying that if you logged into their portal in the last 5 years, they've been tracking your movements across all other apps that you opted in to be into their data collection program, and then there's some cash money on the table. And I mean, who am I to say no? I've spent plenty of money there in the emergency room and the maternity ward.
I mean, my wife and I were there for a month and a half.
Yeah.
last
Yeah.
year.
Ben leads the league in
So-
time in hospital.
I mean, I'm like, oh, why not? You know,
Yeah.
I'm like, I'll fill out a little bit of paperwork,
Yeah.
get a check for $31 8 years from now.
I've been logging into my chart.
Yeah.
What a waste. Talk about memory, though. Like, what a waste of their memory to track me.
And
Like-
seemingly to do nothing with it.
Yeah, they can
Like,
see me from the window.
It's
most
not.
days.
It's not like I'm also getting emails from Wellstar that are like, "Hey, it seems like you're really into unhealthy food based on your Instagram
Yeah.
follows of barbecue shops.
Yeah,
Maybe you should get the old ticker checked out."
Yeah, notice of class action settlement. Your information was disclosed to a third party between February 19th, 2020 and July 22nd, 2026.
It's a long run.
Can anyone tell me like what was going on roughly around February 19th, 2020 that would have made the government want to track me in a medical capacity?
Makes you think.
Yeah, through tracking technologies on Wellstar Health System and their website and patient portal, you are entitled to a pro rata cash payment.
Man.
Do it. I'm in.
Yeah,
I just got to submit my claim by November 10th, 26.
let's do it. We could do that over lunch. We could all sit down and submit the claims. All right, good stuff. We'll wrap it up there. We will be back tomorrow. Y'all have a great day.